What's up, guys? Welcome back. And today we're going to be talking about two things. I have no trades on the NASDAQ 100 today, but I'm going to be going over what could have been traded today, like what setups presented themselves. And then also, I'm going to be talking about how the US defaulting on its debt can affect individuals because it seems to have a trickle over effect that can really affect regular people, even though a lot of people might not be paying attention to it, right? So firstly, let's get into the Nasdaq 100. So today, 9:30, you not only trade the New York session only, but I was quite busy today, so I didn't make any trades. Today wouldn't have been a great setup either, because if you didn't take it at 9:30, basically you'd have been wicked in and out of the market if you had just tried to play it. The best way to play this today if you were going to trade it, but it wouldn't have been a great setup, would have been off of this supply zone. Like you have a supply zone. I think I have a good supply zone here. I'm not sure. I'm just learning the strategy. But this supply zone was from Friday and it seemed to have held into Monday. So we have a supply zone that we have either a supply or a demand zone that price reacts off of, and it actually ended up reacting today. So off of this supply zone or demand zone, we could have taken it to the upside every time with your stop loss a little bit below the supply zone or demand zone, but this could have probably wicked you out. So that's a little danger with this. And there's also this strategy called the strat, where you have one, two, and three that basically tell you what's a consolidation candle, what's a continuation candle, and the third one, I'm not too certain what the third one is. Like it's a reversal candle or something. I'm not sure, but there's something called the strat that I'm trying to mix with this supply and demand strategy as well to get more confluences, and we'll see how that turns out, right? So that's basically it for today. Like it was quick on the charts. Nothing crazy happened. Just we had a big bullish movement in the morning and then the market basically consolidated for the rest of the day. That would have been the danger part if you tried to play that, because if you played that, you'd have probably gotten knocked out at your stop loss or assumed too much risk to make little to no money, right? And as you can see on my Fivers account, I made no trades today. um Trying not to trade every time you see a setup. You want to just get it right. I want A plus setups. I want every time I enter a trade it to be like it has a higher probability of going in my favor, right? So I typed into chat gpt. So this is the second topic. I typed into chat gpt what happens to individuals if the US's credit rating gets downgraded. And this seemed to be a spillover because I just spoke to somebody a while ago and they basically explained it to me, which is that the rate that the US gets and the rate that they offer is basically a risk free rate. So anything above that is a riskier person, which would have been an individual, a business. So automatically, as an individual or a business, you seem more risky as a person to lend money versus a country. So everything that you get while you reside in the country is basically a spillover of their debt rating, right? So you see, a downgrade can also cause the value of US Treasury bonds to decrease, as investors may demand a higher return for the increased risk. Because if they can't pay you, you need reason to actually buy this, right? So you also have the stock market can be adversely affected by a downgrade. It often leads to increased economic uncertainty. Downgrade can also, over the longer term, increase borrowing costs for the government, which can cause slower economic growth, leading to higher unemployment. So a default can lead to the government not being able to borrow money to kind of fund certain projects, which can lead to unemployment, right? And this is also saying in some scenarios, a downgrade could lead to increased inflation if foreign investors lose confidence and demand higher interest rates to continue funding US debt. Higher inflation would mean higher costs of goods and services, as that's going to be the way for the government or the country to pay back its debt, because it's going to basically pass on all of these costs to the individuals, right? And the last thing, this is a platform I've been using for a while. This is Trade the Pool. You've seen me use it in previous videos. This platform actually shows you, this platform allows you to trade stocks, but it allows you to get funding to trade stocks. So if you are a skilled trader, you can actually put your skills to the test on this platform, and they will fund you up to, I think, around maybe $1 million. But this is basically a platform that I think people should check out. They are a subsidiary of the 5%ers, which is a reputable funding broker. But this one is basically a new broker where they allow you to trade only stocks. So if you're looking to trade Tesla, QQQ, Apple, Google, things like that, things like you don't want to trade it on a MetaTrader 5 platform, you want to trade in increments of 100 shares, 1,000 shares. And going up, this would be the broker for you. It's not MetaTrader 5, this is Trade the Pool. It's a little different. It has its own app. I think people should check it out. But that's basically it for today's video, and I'll see you tomorrow. Hopefully we make a trade. Hopefully we see a nice setup. But I'm a bit on edge right now because I'm not sure what's going to happen with the debt default. I've never been through one before, so I don't want to be trading and exposing myself to a lot of risk just to get creamed if it goes entirely the other way against me, right? Like anything can happen, even on days like that. Like say the US defaults, there might be a 50% down day and a 60% up day. So that means if you took it short, you lost. If you took it long and you didn't get liquidated, you're probably break even, right? So you have to really, really be careful in these times. And this is just something I've learned from experience and just getting damage in the market like on a regular basis, just from making like a lot of trades and trading every single day, right? But hope you enjoyed this video, and think you should check out that platform. Check out Trade the Pool, and also check out the Fivers if you want to just trade forex and indices and stuff like that. But I'll see you in the next video. Bye bye.